right, everybody, welcome to Ask Me Anything Wednesday, where I answer your real estate questions. And today's question is, what's today's question? What is the pre-approval process for a typical buyer? So I am not a loan expert, and that's why when I'm not an expert at something, I try to bring someone who is an expert. And I have with me Brian Borders from Capital City Mortgage, Lending Mortgage.
How are you doing, Robert?
How are you, buddy? Good to see you.
Doing great. Good to see you too.
You know, I tell my, and this is an important subject for especially first-time home buyers because they haven't been through the process. And I tell all my buyers that the second step into buying a home is to go to a lender and get pre-approved. Hopefully, to Brian Borders at Capital City Loans.
Hopefully, yes.
And you know, of course, the first step is to find a realtor, right? And hopefully they found me by then, and I'm able to guide them to the right direction. But the second step before they even look at houses is to get pre-approved and make sure that they have an understanding on their finances and how much house they can afford. You know, sometimes you look at homes that are below your means, and sometimes you look at homes above your means. So you want to make sure that you're all set with the numbers, and you know exactly what price range you're comfortable with looking. And so it's very important to get pre-approved. So with that, can you explain to me what the process is for a typical home buyer, first-time home buyer that calls you and says, hey, I need to get pre-approved for a loan?
Absolutely. So typically we would share an application with you, and we'll kind of go over various ways that we can do that. Typically it's done online. You can do it in person, do it over the phone. I would say the vast majority of people do it online. It takes about 15 minutes to fill out an application. I do need to pull your credit because that's an important component for being pre-approved. In addition to that, part of the application, I have to have 2-year history of where you've worked and where you've lived. That and, you know, proving your income. Now with the self-employed borrower, it's a little bit different. We need to see tax returns for business and personal just to verify that income. But if you're a W-2 employee, that's typically pretty easy to do. So that's where we go from there. I have the application. I will review everything, match up their debts with their income, and see if it fits with either an FHA or a conventional loan. And then I issue a pre-approval letter to you to include in an offer.
And how long does this process take usually?
Good question. Some people can take days, but if you give me the information quickly, I can turn around, you know, half hour, an hour.
So just for a pre-approval letter.
Correct. That's just a pre-approval letter.
Right.
Now the actual process of buying the home is going to obviously take a little bit more
absolutely.
information and all that. But yeah, for the pre-approval process, it shouldn't take more than an hour.
And I have a question. So sometimes buyers say, well, I don't want a big hit to my credit history.
Yep.
Is there other options that you provide or that the buyers can be aware of?
As far as a credit pull, we have to do a credit pull. A mortgage pull is different than a credit card pull or a car pull. They know that it's a more involved process, a lot more underwriting that goes with it than with a credit card versus, you know, what we're doing. So there is going to be probably a small hit, maybe a couple points, 5 points, something like that. If you're doing 3 or 4 mortgage pulls in a month, it might drop it down, you know, a few more points than that. But typically the mortgage pull is looked at differently, and it is a hard pull that we do.
Okay, so initial pull is going to be a hard pull anyway.
Yes.
All right. So if they're shopping around for a loan, which, you know, they need to go with you, but if they want to shop around with different lenders to see what each lender offers as far as each lender has to do a hard pull.
Correct.
Okay.
That's correct. And the main reason is we got to pull all of your debts, and that's what we've got to use to offset the income to do the debt to income ratios. I personally want to pull credit just so I have a good clear picture as opposed to somebody's word on that. Right. So that's just typically what we do.
Great. And another question that has been brought up to me is, do I need 20% to
Absolutely not.
No, okay.
So right now, Fannie Mae and Freddie Mac both have a 3% down option on a conventional loan. And that's called the Home Ready and Home Possible program. There are some income limitations that apply to that, depending on which county you're in and all of that kind of stuff. But that's something I would look up to make sure. There's also 3.5% down, which is FHA. Both of those are great for first-time home buyers, the Home Ready and Home Possible and the FHA. Typically, conventional is going to be a 5% down, but again, 3% with the Home Ready and Home Possible. In addition to all of that, there's VA, which is 0% down. And also, we do have down payment assistance programs, one through the Federal Home Loan Bank. They'll cover community helpers and those kind of things. There's about $10,000 for that. They do that on a 1-to-4 ratio. And then there's also the Georgia Dream that we provide as well.
Can you quickly go over those two programs? Because I actually have a first-time home buyer who asked me about that. And just clarify, how do you go about getting the down payment assistance, and how is it an easy process, or what's involved?
Between the two, one of them is a little bit easier than the other. Okay. Georgia Dream they've got money allocated throughout the year. That is a little bit more of a process. You're essentially financing that down payment assistance through the loan. The FHLB one, that is essentially a grant, so a second mortgage, which goes away after 5 years. The Georgia Dream does not go away after the 5 years. So there's a couple differences. I tend to go to the FHLB one. I think that's a better product, just because it, like I said, it goes away 20% a year. So if after 5 years that is gone, and that process is fairly easy as well. There are income limitations on both of those programs as well.
Okay.
And they depend on how many people are in the house. So they count everybody in the house, kids, adults, everything, as far as income. So that's usually the biggest impediment to somebody using that.
So they combine the adults' income?
Yes. Oh. Yes.
And how long? So if a buyer comes to you and says, "Hey, I want to apply for a first-time home buyer program," how long is the process? Is that going to make the process longer?
I can typically do the FHLB in 30 to 40 days. I push for 30. If I can get all the information up front right away and get it approved through, both of those have to be approved by another party, not just us, which adds to the time. But at the FHLB, anytime between 30 and 40 days, I'm very comfortable with. Georgia Dream is probably closer to the 40 days, maybe to 45. But we could do both of them within the 30 to 40 days, I think.
So if a buyer wants to use one of those programs, they kind of have to allocate extra time for
between in the contract. Yes.
The contract. Yeah.
Yes.
And when do they get the answer that they qualified for it? Is that something they're going to know right away, or is that going to be a 40-day answer?
Well, it's typically done about a week, at least a week in advance of closing. So, okay, I mean, right. If we're looking at 40 days, it's going to probably be done within 30 days. I try to get that done as quickly as possible, but again, we're dependent on the other parties approving that, either the Georgia Dream or the FHLB.
Let's move subjects another one. What is the 1099 requirements? If someone's a 1099, what are the requirements for them to qualify for a loan?
Yep. So I typically need to see 2 years of tax returns.
Uh-huh.
If they own the business, I need to see the tax returns as well, the business returns and the personal. But typically, for 1099, we'll use the 2 years of tax returns, and that's sufficient.
Okay, great. And for W-2?
W-2, I need 2 years of tax return. Sometimes I need tax returns. That I just need the W-2s, the 2 years of W-2s, and then we'll get we'll get their tax transcripts from them.
So basically 2 years is the minimum that they need.
2 years minimum for everything. Correct. Yep. Now, in self-employed, I will say that if somebody owns a business, which is more than 25%, we'll have to see profit and loss statements from the last 3 months. And there's a little bit more detailed information that we do need.
Gotcha. Excellent. Hey, last question. What are the mortgage rates right now? What are latest mortgage rates?
Right. Well, this morning was 3.25 for a 30-year. This is assuming 20% down, and 2.5% on a 15-year.
Nice. And then you
And
also offer,
FHA, yeah, FHA was about 2.75, 2.75.
okay, and FHA is for 30 years?
Yes, for 30 years.
Really? Oh, okay.
Mhm. Yep.
Okay. That's a lot lower.
So one thing that most first-time homebuyers don't notice is with the FHA and a VA, there are fees that go along with the loan. They're added on to the loan. So
Okay.
FHA, they add, 1.75%, what they call an upfront mortgage insurance premium. That just gets tacked onto your loan. You pay it over the 360 months. VA has their funding fee that depends on the benefits that's coming to the borrower from the veteran.
And obviously not everybody qualifies for VA. You have to be a veteran
Correct. Veteran or a surviving spouse.
or a spouse. And with FHA, that mortgage premium can you get rid of that, or does that stay with you
So
through
FHA, it will stay with it the entirety of the loan, especially if you're putting 3.5% down, which is, again, it's a great product for a first-time home buyer to get in because their debt to income ratios are higher than a conventional loan. So,
Hey, my friend, you're awesome. Obviously very knowledgeable in your field, which is, I'm glad I got to talk to you about this because these questions come up all the time, especially with first-time home buyers. They're just getting started and getting some guidance in how to kind of go about the process. So I'm glad that I was able to talk to you and clarify some stuff.
And I will add a couple things here. One is I always encourage customers to shop around, make sure you get the best deal. Number two is when that application comes to me and I've reviewed it, that's one where I will walk through it with the client and say, here's what the FHA looks like. Here's what a conventional looks like. Let's talk about which one looks better and is a better fit for you. So
that's great. That's a good thing to know. You want to put everything in front of them, make sure that they are exposed to all the options that they need. Hey, how can people get hold of you? For
social media is a good way. Facebook and Instagram, LinkedIn. I'm on all those. I can also text my application to any of your clients that come through, or they can text Brian Borders to 36260, and that will link up to the application as well.
Oh wow! Okay,
that's one way. And then there's another one, which is they can just type in bborders.cchl.com if they're on a computer.
Excellent. Hey, my friend, thank you so much for your time. I really appreciate you.
Absolutely. Thanks for having me on.
No problem. We go play golf sometimes.
Absolutely.
we have to take separate carts though, because obviously you're a lot better than I am. So.
Whatever.
You might get bored. Thanks, man. I appreciate you.
Yep. Thanks.
See ya.
Bye.